In this market, finding deals on stocks is extremely difficult as many stocks have run up quite a bit since their lows in March. That being said, there are still some companies that are reasonable valuations here in June 2020, and I'll be sharing some of those ideas with you guys here today. So in this video, I'm going to go over 3 different stocks that I have a close eye on here for the month of June 2020. I think they're trading at some pretty good valuations. Could be better, but I mean, it's better than many other companies in the market right now. So it would be worth to keep a close eye on these stocks, in my opinion. And as always, guys, if you agree or disagree with me with these picks, let me know in the comment section down below. But if you're brand new here, drop a like down below to show your support for the channel. Hit that subscribe button as well with the bell notification so you don't miss any new content. So this is going to be a fun one. We have 3 very different companies, so let's get right into it. So kicking off the list here is a company that I've discussed a while ago on the channel and is still a large tech company here today that's often overlooked. This company is going through some big changes recently with a new CEO who has taken charge last month, who I think has very good potential to turn things around for this business. He was the man involved with the Red Hat acquisition, which is one of the best decisions in my opinion that IBM made to truly make the company relevant once again with software. During their latest earnings report, he made a statement saying that he is focused on building out IBM's cloud to help their customers during these tough times, and they also want to focus on AI moving forward as they see some big opportunity there as well. Let's not forget that these guys created Watson, which in itself is a remarkable achievement, so IBM does have the talent and capability to be a dominant player here in the future. Now, in my opinion, IBM posted very impressive numbers in the past quarter. They had $17 billion of revenue overall, but when you break down the segments, the cloud revenues grew by 23%, the Red Hat momentum grew by 20%, and when I look at these numbers, I think of Microsoft-type growth numbers here when it comes to these segments, which is very impressive. This all resulted in around $11.6 billion of free cash flow over the last 12 months, and their current cash balance sits at around $12 billion, so this is a very financially strong company. Looking at their balance sheet, IBM has $153.6 billion in total assets compared to $133.3 billion in total liabilities, so this company does have some good value in it currently. The one red flag though with IBM is their debt load of $64.3 billion. Of course, this is a lot of money, but a lot of it was due to the Red Hat acquisition, which cost the company $34 billion. But guys, considering the company generates around $12 billion of free cash flow annually, they can aggressively pay down this debt in a few years if they wanted to, while still growing the business. So really, I think that the issue with IBM here is the brand image that they have still. They're seen as a old, irrelevant, kind of dinosaur type company with no innovation in its future. Now, I think that the reality here for IBM is actually far from that. They are a very successful software-based company with some hardware components, and I do believe that they're playing in spaces that could make them a lot of money in the future. This includes cloud, AI, and other software services that they offer their customers. Also, just keep in mind that Microsoft was also a very boring company not too long ago. You know, they weren't really innovating much. They just had a few products that were around for a long time that consumers used, but I mean, nothing really exciting about the business. And then their new CEO came in, Azure started picking up, and now Microsoft is one of the hottest stocks to own in the stock market. I think something similar could happen with IBM here. Maybe not to that extent of Microsoft, but definitely to the point where this company turns things around and the stock prices could potentially see fresh new all-time highs. Now, how long that takes to happen is up in the air still, but I do believe over time, if executed properly, IBM can achieve this. Now, I started talking about IBM stock when it was in the 130s, and I did find some good value there, but since then it climbed over $150 per share, but is now currently sitting at 22% off of its highs, and I'm liking what I see here. The company is trading at a $108 billion market cap, has a very low PE, which is undervalued on historical metrics, and it has a nice dividend yield that I'll discuss in a minute. You can see the concern here with IBM is that declining revenue that they have, and while I'm typically not a fan of this, I believe that if they can truly make Red Hat reach its full potential and continue growing, and they execute well on their cloud and AI, they can turn this business around and pull in over $100 billion in revenue every single year. You can see here that they're also highly profitable as well, and as they grow these future segments, if you will, I believe profits will increase that much more. Now, I did mention dividends, and IBM pays out a strong one for investors. Their current yield is around 5.5%, which is extremely rare for a tech company, especially for one that plays in the cloud and AI space. They have 21 years of growth, a manageable payout ratio, and they also grow this dividend on average by around 8.63%, which is very respectable. And if you remember, we also saw that they have some very strong free cash flows, so they can continue sustaining this dividend while paying down their debt and reinvesting back in the business. So it's really a win-win-win here, I believe, for investors. Now, one of IBM's longest criticisms that I've seen, and one that I personally have as well, is their large workforce. It just seems very inefficient here with the amount of employees IBM has compared to the amount of revenue and income that they generate. The company has over 350,000 employees, and investors have always questioned if this is needed, and we're finally seeing the company make moves here. IBM is reportedly cutting thousands of jobs, but we're still waiting on a confirmation of the final number. Now, although this is sad to see because many people will be out of work soon, as an investor, this is probably something the company should have done a long time ago to increase efficiency. They're blaming these cuts right now on the global issue, but we saw the amount of free cash flow that the company has left over every single year after they paid out all their expenses. So they could sustain this workforce if they really wanted to, but I think they're finally listening to investors. The new CEO is finally making changes, and they're trying to become a much more lean and efficient company. IBM could be using this opportunity here with everything going on in the world to really cut their workforce and blame it on that issue, because I think this is something that they wanted to do for a very long time, but it would look extremely bad on the company if they did this during strong economic times. So now that this stuff's happening around the world, it's a perfect opportunity for them to really cut down on that workforce and become an efficient company. So really looking at IBM as an investment here, guys, we really need to see them execute on their cloud and AI, and they need to continue growing that Red Hat part of the business because they did pay a lot of money for that, and they need to justify that over time. The company has technology behind it. They have a new CEO. They're trying to turn a new page here, and I believe if they are able to execute well, this could be a very strong performing stock over the next decade. Waste Management is our second company this month, and this is a business that is in a boring industry, but it's a very consistent and sustainable company. As their name implies, they are a massive player in the waste management space, and this infographic here truly depicts the different arms of the business. What I like to look at is the bottom section where they go over their financials, and they state here that they have returned $1.1 billion to shareholders, earned $3.9 billion in cash operations, and had $1.8 billion in expenses, and this was all from the $15.5 billion of total revenue generated annually. Now, this $15 billion of revenue is broken down into four core segments. The collection segment, which makes up the vast majority of their income, landfill, which makes up about 1/5 of their income, and then transfer and recycling, which makes up the rest. This company does everything from pick up waste, to consolidate it, to send it to a landfill, to recycle it if it's possible. So now if you're someone who invests into businesses with a purpose for the environment, this is a solid company to look into further. From an investment perspective, this is a strong growth company with consistent yet impressive growth year over year in revenues and income. As a potential investor, everything here seems to be trending in the right direction. Now, I briefly touched upon this, but Waste Management is heavily focused on their investors, similar to IBM as well. This company directly rewards shareholders from dividends and share buybacks, but also through merger and acquisitions and reinvesting in the business, which results in consistent and continued strong growth that they have already been seeing. Because of the dividends that this company pays out, I've seen a lot of dividend growth investors flock to this stock and have it at the top of their wish list. Waste Management has a starting yield of 2.2%, a respectable payout of 60%, which is very manageable, and a growth history of 17 years. This company manages their money well, and if I was a shareholder here, I'd be confident that the management team has shareholders like myself at the top of their priority list for the business. Now, from a historical yield perspective, I would say that Waste Management is cheap today, but it is close to fairly valued. But guys, in my opinion, to get a well-run business like this with a strong balance sheet and a strong focus on shareholders at a fair value in this type of economic environment, it's hard to really pass up on this potential investment even at a fair value. The stock is currently 20% off of its highs, and Waste Management is currently less than a $50 billion business. And to be honest, you don't really see a 20% discount on this company's stock too often. It's usually a very premium player, and most dips get bought up fairly quick. And I suspect that while we're down today, the stock will most likely see a good recovery in the next couple of years as waste management necessities get back to prior levels. Now, in the next few months, the company is expected to see some decline in their earnings and revenue, but they are committed to keeping that dividend going strong. They rely on businesses for waste as well, and with lockdowns and work from home, this decreased substantially, but as things start to pick back up here again in the economy in June, this company should start seeing some recovery and get back on track within a few quarters or so. This is an essential business, a company that we need out there. Humans create a lot of waste, and we need companies like Waste Management to efficiently pick up, filter, and recycle that waste if possible. I think it's a great business. I think it's a very simple yet profitable business. And as an investor, it's a very intriguing investment. So guys, I had to include Uber on this stock here because I've become extremely bullish on this company over the last few months. Now, while the rides business is down, the Eats business is thriving, and I believe over the long term, Uber is a winner in both these spaces, which will be profit-generating machines for the company. Now, I created a video just yesterday on why I'm so bullish on Uber, so I'll link that in the description to make sure to check that out because I go in detail there as to the reasons why I'm still so bullish on this company. But essentially, in a nutshell, I believe that Uber has pretty much had the worst behind it here. It's proven to me that it can sustain pretty much the worst possible scenario for the company, and I think it's going to come out much stronger from this. And of course, as we know, while the rides business starts to resume and come back to more normalcy, the Eats business is just going to continue getting stronger. I believe that Uber is going to be an extremely important business in the future with the services that they offer and the technology that they're working on. So I will definitely be keeping a close eye on this stock and be looking to buy some more shares if we do see a discount here in June. The stock is currently around 25% off of its highs, and the company has only been on the public market for about a year or so. But like I discussed in the other video, I believe the stock is severely undervalued here today and is also severely out of favor. The growth potential on their proven model, guys, makes me very bullish with this company, and I'd be a buyer of Uber stock again in the 20s or lower. But even in the mid-30s here, it is a tempting buy for me to add just a little bit more to my position. Uber isn't really a business you can value on things like a PE or a dividend yield because they don't have either of those things. They're still not profitable. So you're really betting on the future of this company, similar to a company like Amazon. Amazon was not profitable in its early days, and it took them a while to really reach profitability. But we all know now that Amazon is a profit-generating machine and it's here to stay. Even Tesla could really be thrown into this category. In its early days, it was not really a serious threat. Investors really overlooked this stock, and now it's become a truly global player with massive growth and profit potential ahead of it. That's at least how I view Uber, and that's why I'm extremely bullish on Uber. But again, check out the full video that I created yesterday to get full insights as to why I'm really interested in buying more shares of this company. I think that once things start going back to normal here in the economy, that institutional investors will probably start piling back into the stock again because there's no more fear that this company is going bankrupt anymore. They've shown that they can actually withstand this and get out of this much stronger. So once that institution money starts pouring in, I think we can see a big run in Uber stock in a very short amount of time. At a $60 billion market cap, I think Uber is just stupidly undervalued here. I think it should be much larger, at least a $100 billion company, most likely around a $150 billion company. But sometimes the stock's just out of favor, things just don't work out in the short term. But over the long term, if you're patient and you have high conviction in these types of businesses, I think you can make a lot of money out of these kind of investments. Yes, Uber is somewhat speculative. Yes, Uber is higher risk than other companies, but I believe the potential here for some big gains over, say, 5 to 10 years is what makes me very interested in buying this stock at these levels. So IBM, Waste Management, and Uber. Let me know in the comment section down below which of these three is your favorite. Do you agree with any of these picks? Do you disagree with them? I'd love to hear your thoughts in the comment section down below. I read every single one of them, so please share with me whether you're bullish, bearish, or neutral on any of these stocks. Guys, thank you so much for watching. Don't forget to invest positively, but I'll see you in the next one.